is Michelle Kreutzer. I'm the Executive Director with the Pittsburgh Airport Area Chamber of Commerce. Also assisting me this morning is Susan Havanek, our member engagement specialist, who you'll hear from later in today's program. Again, thank you for joining us for this morning's Tips from the Experts Business Solutions series sponsored by Pittsburgh Networks. Today's topic, accounting tips for business owners working with government funding, loans, and grants, is presented by John R. Sommers, CPA with McKeever, Varga, and Senko. John graduated from Gannon University in 1992 with a bachelor's degree in accounting. He is a certified public accountant with over 27 years of experience in both industry and private practice. He started his career in heavy manufacturing. After 3 years in industry, he moved to public accounting with Grant Thornton and KPMG. He specialized in large non-public companies focusing on manufacturing and employee benefit plans. He moved back to industry, becoming a controller of a $20 million manufacturer. He was responsible for managing the company through a difficult bankruptcy, working closely with both internal and external stakeholders. He then took a position as a regional controller of a $55 million manufacturer and proceeded to assist them in a public bond offering. He was a founding partner of DeLoe & Sommers LLP, a public accounting firm in 2004. The firm merged with McKeever, Varga, and Senko, a firm with over 40 years of history. The merger increased the range of services available to clients and provided the infrastructure needed for growth. Mr. Sommers is a director and shareholder of MVS currently. McKeever, Varga, and Senko is a local accounting firm with auditing, accounting, and consulting services to the tri-state area. McKeever, Varga, and Senko has practice specialties in financial institutions, government, manufacturing, real estate, employee benefits, and nonprofits. Once again, we are thrilled to have John with us this morning. And with that, I will turn it over to you, John. Thank you.
Thank you so much. So this morning, we're going to start to talk about the PPP loans and when people should recognize those as income to them on their financial statements. And of course, we're starting out with, as the class was called, recording the PPP loan in accordance with GAAP. So if you're not in accordance with GAAP, we can discuss some of that towards the end also. But ultimately, and we'll also talk about a couple other areas as we go through it. But for the most part, if you're a for-profit or a non-for-profit, recording your PPP loan in accordance with GAAP, this is useful to you. Okay, so first we'll define generally what GAAP is, and it's generally accepted accounting principles. So if you're getting an audit or review or a compilation, you're probably getting in with accordance with GAAP. There are other options out there, but that's most of what stakeholders are looking for. When I say stakeholders, the biggest stakeholder for most of these would be a bank who may be holding a loan for you, or a government entity that is going to fund your nonprofit entity. So most of the time it'll be in accordance with GAAP. So that's why we're starting with that. And then the PPP loan, which everyone knows is the Paycheck Protection Program, which was part of the Corona Aid Relief and Economic Securities Act, or also called the CARES Act. What they were trying to do is get money out to people. And originally it was said to prevent companies from putting people on the unemployment line by keeping them working and paying them through these companies. Later on, there'd be some companies that argue that wasn't exactly the way it turned out. Yes, it was used for wages. These monies were required to be used for wages, but some companies were then excluded because they were too big or for other reasons. They could have got financing somewhere else. Not here to dispute how fair that was or was not, but that's how the original CARES Act started out. GAAP guidance. Non-governmental entities may account for a Paycheck Protection Program loan as a financial liability in accordance with FASB ASC Topic 470, debt or under other models, and certain conditions are met according to new guidance for borrowers. So what we're saying is, for most of you who are in the for-profit realm, there is a FASB out there that talks about when you record debt, and what the accounting standards people have said is like, look, if you're a for-profit entity, we want you to go to FASB ASC Topic 470 and record this as debt. And you can retake that to income at a later date when it's considered not to be debt any longer. But you start off with recording it as debt. And we'll come back to what happens for the nonprofits. Okay, but for the for-profit entities, what is debt under ASC 470? It's an arrangement that provides a lender with a contractual right to receive consideration, a borrower with a contractual obligation to pay consideration on demand, or on a fixed or determinable rate. So it can be any type of loan, would fall under ASC 470. And what it further does is breaks it into a current versus a non-current portion. So for the balance sheet, when you record what is due within the next year or business cycle, most of the time, which is 1 year, you record that as short-term on the current section of your liabilities, and anything that's out over a year or a business cycle would be considered long-term. And they use the word operating cycle. I use business cycle. This slide here is probably, if I gave you only one slide today, this is the slide I would want you to take away with you. This one breaks it out and gives you really a summary of what ASC 470, says 405 and 470, but 470 tells us about when you record the debt. So the debt is legally released. Threshold for recognition of the income is when the debt is legally released from being the primary obligor under the liability, either judicially or by the creditor. So when is it that you are forgiven from that debt? Then you take it to income. And the timing of recognition immediately once the debtor is legally released. So there will be some people splitting hairs of when you're legally released, but at a point in time where I think that if the bank has said, we have approved this, you are probably legally released, even though it has to go back to the federal agency to follow up with. Now, the federal agency probably is not going to go in and approve every single one of these entities. What they do is have a right to come back and audit those for, I think, up to 5 years. So you are released when the bank says you are released for the most part for the for-profit entities. And when you are released from that and record this money that you received in the PPP to income, you present it on a gross basis as a gain on extinguishment of debt. So you record as such. Most people are going to use the words, not just extinguishment of debt, but they're going to put PPP loan forgiven or something like that as a line on that balance, on the P&L for the forgiveness of the debt. We'll come back to this, but later, the nonprofits, a little different. They're under ASC 958, and when the conditions have been substantially met, they can record to income. And substantially met is they've used it for the purposes of which the funds were given to them for. So if they were given to them for wages and other type of employee cost, and you've used them for wages and employee cost, you can then accept that as the conditions have substantially been met. So let's just say you got the loan on July 1st, and on July 14th, you have paid all of that money out in wages. Then on July 14th, you would have recognized it. Now, if that amount overlaps 2 time periods, then you can actually recognize part of it when the first time period's over. So if you came to the end of July and had to record something and you had not used it all yet, you would record part and then the other part, the other one. For nonprofits, you present it on a gross basis, essentially grant revenue or other income. And in that situation, again, you're probably going to probably label it as such that it was PPP grant revenue or PPP loan forgiveness or something like that. And you'll list it up in the grant income section. We also will talk a little bit about IFRS, and I tell you, I am not an IFRS specialist. I just thought it was interesting to see what they say. They say when it's reasonable assurance that the conditions have been met. So IFRS applies to anyone who's following the international financial standards, and those are for-profit businesses also, and yet it looks so much more like ASC 958 than it does ASC 405 that I thought that was interesting to discuss. If you're out there and you're under IFRS, you should follow up more on this, and I may have a couple more comments, but again, I'm reminding you, I'm not a specialist in IFRS. Selecting the appropriate accounting method. How much is expected to be forgiven? So you know by now, if your year hasn't ended, you know by now how much you're going to probably be forgiven by how much you used on wages. If you haven't filled out the forms yet, or at least looked at the forms, you should look at those forms before you decide how much you believe is going to be forgiven before you get to your audit with your accountant or your review or your compilation. A lot of times accounting, we say, you look at form over substance of the transaction. Usually I'm really a substance kind of guy and say, look, we should really look at substance. Substance here would lead me more to the ASC, but in this situation, it's really more, or excuse me, ASC 958, but it's really more about for the for-profit entity, the form, and the form being 470. So let's discuss the form. Recording the PP loan as a loan. Either way, if you get that money and you've done nothing to earn it, you've not paid any of your employees or used them for allowable expenses, it's still a loan in either situation. They lent you the money and they guaranteed the loan with the bank, so the bank would get paid back. The government expected you to use the funds for payroll and other allowable costs. Depending on how you use those funds, most of the loan can be forgiven, and for most of you, most of it will be forgiven. The loan is for a profit-motivated company. It's just better guidance to record it as the loan and to not take it to income until it's completely forgiven. There were some arguments early on, and still stand to this day a little bit, that there's a possibility that a for-profit entity could argue ASC 958 is a better application of the rules for them. I don't think it really holds water anymore. Early on, there was some talk that it would. But what's important about it, if you did choose to go with that guidance and follow it, you may get a change in your opinion. You wouldn't probably get a disclaimer of opinion, but you might get an except for opinion. We'll talk about that later. In certain situations, if I was the controller or CFO of a company who was going to blow loan covenants by not recording this to income in the current year, I may want to take that except for, in my opinion, discuss it with my bank, and as long as they're okay with it, go ahead and take that. You wouldn't be in accordance with GAAP. You would be except for this one issue, and that would tell the readers exactly why you're doing it and how you're doing it, and then you could maybe not blow those loan covenants. So it's important that you have that discussion with the bank, because they may say, well, if you're not in accordance with GAAP, that's our first requirement, then we're just not going to accept it. But some of them go, yeah, we see what you mean. Let's go ahead and go with that except for in the opinion, and let's go from there. So going back to the substance of the thing, even though the nonprofits get to recognize this as a grant and the for-profits don't, to me, it really feels like a grant. It feels like the money was given to you. It wasn't expected to be paid back from day one. It was expected to be used on wages and salaries, and other types of expenditures were allowed, and you did that. So that sure feels like a grant to me. And I know that that doesn't apply in the for-profit world, but the substance of the transaction would lead me to believe that that's why, if I had a client who just went with something that was not in accordance with GAAP, I would a lot of times disclaim an opinion on their financials. In this situation where I'd give them the except for, I feel like there is enough guidance out there to support your argument a little bit. Again, you ultimately have to discuss this with your accountant, say, hey, I know I'm going to get an except for my opinion, and my bank, I've talked to them, they know it's coming. It may be worth your time to do that. So while we're saying this topic's about being in accordance with GAAP, I'm giving you an opportunity to be not in accordance with GAAP on this one thing, and have that discussion with both your auditor and your bank to maybe keep you from missing a loan covenant. And I think that some of you are on this phone call only because you want to know how to record the transaction properly. And there's a few people out there, as I talk to more and more people, saying, but it's really going to screw me up if I record it the way everyone's telling me to record it. Well, here's an opportunity to possibly do something other than what everyone's telling you to do. So we've kind of talked about that. What to expect from your CPA or auditor. Either way, you should expect the auditor to request that you disclose in a footnote the stance you took on how the PPP loan was recorded. So you're going to quote that you used ASC 405 or used ASC 958, and you're going to say, because of that, you took it, and this is when you thought you were substantially forgiven for those debts. Certain situations, the auditor may put an emphasis of matter paragraph in the opinion, and that could be for many different reasons. Either A, they don't feel comfortable that it's a guaranteed done deal that you're going to get forgiven, or they just might want to say, look, comparatively to what you normally do, this is a very large sum of money, and we don't want anyone to believe that it was from operations that you generated this extra money. So there's different reasons why an auditor may put an emphasis on matter paragraph in the opinion for this PPP money. They also may ask you how the debt covenants were affected by this position. So if you have other loans with the bank, and depending on how you treated this PPP loan, how did it affect the loan covenants? You may have become out of compliance. So you may have to discuss that. You may have to get a waiver from your bank, and they may have to discuss that in the financials. So there's a bunch of things around this that it's just not as simple as, hey, we put a debit here and a credit there. You want to be very detailed in your explanations to your report. Now, keep in mind, your report, the auditor is always looking at who is receiving the report. Is the report going to just board members? Is it going to a bank that's holding debt? Is it going to a government agency? So they'll look at it from a perspective, if I was in any of those three people's shoes, what would I want you to disclose to me so I understand your situation better? And that's where you're going to have some extensive writing in your footnotes. Keep in mind, your auditor has certain requirements to those, but there is a lot of leeway for you to discuss as much as you want to discuss there. As long as what you're saying is not misleading, it's truthful, and it pertains to the information that we're providing, you've got a lot of leeway to spell that out as much detail as you want. Okay, for the nonprofit entities, it's safe to say that the ACTOP 958 is very relevant to you in the way most people want to be recording the transaction. When you get the money, you're going to put it up as a loan, but you're going to take it as forgiven as soon as you meet those conditions. So again, if you meet those conditions 7 days after getting that loan, you recognize an income 7 days later. If you recognize it 20 days later, you can recognize it in 20 days later. So in that situation, 958 seems to make the most sense and is easiest for the nonprofits, and how you would normally record any loan from a government agency as a nonprofit. When you get federal money for something else, you would recognize the same way. When you've met the requirement, you can recognize it into revenue, even before it's totally forgiven by that governmental agency. Okay, so again, guidance says when conditions are met, there's no barriers to the entitlement. So I can't think of too many barriers right now that may prevent you from getting it. If you are immediately under audit for some reason, that could be a barrier. If you knew that you took a very unusual stance on what was considered to be some of those expenditures, that would be a possible barrier to the condition. If you are questionable, if you qualify for it, that may be a barrier to the entitlement of that money. But I'm sure there are others, but those are the ones off the top of my head that we'd be looking for. We can split hairs over where the conditions met from respective conditions forgiveness has been met. Was the wage paid to the employee? That would seem most likely, not just when it was accrued by the employee. Other things like that, but again, if you have a question about that, talk to your auditor about it. Is there anything in the foreseeable future that may be standing in the way? And for most of you nonprofits who are going to ask forgiveness, there aren't going to be many barriers. It's going to be forgiven. And I think the talk right now is if 50,000 or less is not going to be even audited anyway. So you're going to have a lot of leeway. Again, talk to your banks. Banks, for the most part, appear to be holding people off because they keep thinking the form's going to get simpler and simpler. The forgiveness may be higher than 50,000, maybe not. But I think now, as I talked to a few bankers, one yesterday, she's like, look, we're running 70 through at a time as a test to see if it works. And then we're going to ask everyone else to start filling out the paperwork. So it's getting closer to a time where everyone's going to be requesting that forgiveness. How should the nonprofit record the income? Record it gross amount received. Reasonable to put on a separate line from other contributions. We should disclose in the details the amount received. So if you don't put it on a separate line, you would have to at least describe in a footnote how much it was PPP money. Let's go back to IFRS. And again, not that I expect too many to be in IFRS, but why this was also interesting. In ISA 20, they discussed the recognition threshold of reasonable assurance. Since the forgiveness is based on payroll and other costs for the business, the grant would be over the period of related costs incurred to earn the forgiveness. Again, This makes a lot of sense. The remaining amount not yet recognized in income would be presented as a liability on the balance sheet, and that was consistent with both the nonprofit and the for-profit. But was unusual, it appears you can record on a net basis. And this is the only one that shows it on a net basis. They said, look, take it against those expenditures that were paid, those salaries, and net it on the line of the P&L. And that's kind of unusual for us. And so I find that kind of interesting. I wouldn't encourage anyone under GAAP, be it nonprofit or for-profit, to do this. But if you know someone who's on IFRS, or if you're a subsidiary of a company that's on IFRS, just know this is out there. In summary, there's a couple places you'd want to look to see some of this stuff. June 10th, the Journal of Accountancy published an article by Ken Tizak, which will refer to the technical questions and answers. That is really good to Google because it comes up real easy for you, and you don't have to be a CPA or belong to the AICPA to get that. It's just out there on the web. Those technical questions and answers are always good, because if you think you have an unusual circumstance, a lot of times there is something real close to what you're doing out there in those technical questions and answers. There is my contact information. If you have a question, you want to email me. If you want to call me, that's fine. I love to talk to people, and give you some advice. I will tell you, as we leave it on this page for a minute, that if you're just a person who's just having an accountant do your tax return, this gets even more muddied from a tax perspective, because of when you recognize that revenue and when you recognize the expenses pertaining to that. Unlike IFRS that's letting you do it net, it would appear that right now, and again, I'm not a tax specialist, we have guys in our office who we kick these things to, and I know that a couple clients I've kicked to the tax department with very similar circumstances come out with very different answers, and it all depends on the client. But ultimately, it looks like you may not take it into income. You probably won't take it into income until 2021 if you don't get forgiveness until 2021. But those expenses were in 2020. Well, the Congress had said, this money wasn't going to be taxable income to the entity. And then the IRS come out and said, well, we're not going to allow you to take the expenses as a tax deduction. Well, if you're splitting years, okay, which year are you not allowed to take the expenses, in year 2020 or the year 2021? So it's getting very convoluted on the tax side. A lot of people are saying, hey, look, extend your tax return immediately in 2021 for 2020, and don't do the return until Congress or the IRS gives even better guidance. So that is getting very convoluted outside of my area of expertise, but even the good guys at this are still kicking around a couple ideas on that. So if you're that person who does it for just on a tax basis, something you still want to consider. I think I left my contact information up there enough, but I want to go back to page 7 or 8 on the slides if you've got a copy of those. That is really the guidance I want you to remember. That's the chart I want you to keep handy when you talk with your accountant, so you seem knowledgeable and can have an intelligent conversation with them and decide what you're trying to do. Ultimately, how this affects your loan covenants with your bank, you'll, again, can read from this, understand from this, and have a conversation with them about why you may be down on your income and not meet the covenant you were supposed to meet, and they should give you some either waiver, essentially allowing you to not meet the covenant, or agree to let you record it not in accordance with GAAP and take the except for opinion on the financial statements. So I think these are very helpful for people out there who are very pressed to meet a certain number on their financial statements and how they need to approach that with their bank and auditor. So we'll go back. Oh. If anyone has any questions, I can't see those, but I think that Susan would gladly ask them on your behalf.
I am here. Hi, everybody. Yeah, now would be the time. If you do have any questions, go ahead and type those into your Q&A box while we have John here, but he can help you out with that. And If not, in the meantime, while you're thinking about questions, we just want to thank all of those who are have joined in to watch today's webinar. And thank you, John, for sharing these valuable accounting tips, especially under these circumstances. This is something different and new, I'm sure, for everybody, and working with these government funding loans and grants. So thank you so much for taking the time to help us out with this. Those of you who did register today, you will receive the PowerPoint from today's in an email later this afternoon. So, and this webinar is also being recorded. So we'll notify you when that is up on our website so you can review that as well. We want to thank Pittsburgh Networks for sponsoring our Business Solutions webinar series. And we invite you to join us next Wednesday, October 28th at 10 a.m. for our next networking series webinar with MJ Calloway, Selling in a Post-COVID World. So you can pass that on to your coworkers if you're looking for some tips in that. You'll find all those details for registration on our website. And again, this is your last chance for questions. Thanks. Reach out to John if you do have something specific. And we wish you a productive day. Thanks.
Thank you all for your time. I hit stop share, I assumed. That's wrap. Do stop.